Hello and welcome to Livewire Markets. My name is Chris Conway. Today I'm sitting down with Will Lopes, who's the CEO of Catapult. He's going to be talking to us about the latest company results. Will, it's great to see you again.
Yeah, thanks for having me. We're really excited.
Let's focus on the big picture to start off with, Will. The headline numbers that you think investors need to be aware of coming out of the results.
Really two big things, and then I think a little bit of note on their platform. But top line growth continues to be really strong for us. So I think we're up 19% year over year. The way we measure that is really to the contracted sort of subscriptions that we have. So ACV is our core top line growth. That's up 19%. Most interesting, Chris, is that growth now is coming with a operating profit margin that's scaling significantly faster than our top line. So we actually have seen our EBITDA, our management EBITDA, which is what we use for our profit metric, grow 50% year over year, and that is basically driving our operating profit margin to be at 14%. So we're really exciting. I think the other aspect to note is a combination of those two things means that we have now entered a record high from a Rule of 40. We're sitting at 33%, which is up 12 percentage points from this point 2 years ago. And that the fuel rods driving the future growth for us just keeps getting added on, right? So we added Perch into the mix, which is a gym solution for us, and now we've added Impact, which is a scouting solution to our mix. So we're feeling pretty confident from the top line perspective, and we're feeling pretty confident, where things are going from a bottom line perspective as well.
Yeah, sounds like the flywheel is really gaining momentum. Will, I wanted to touch on the Impact acquisition a little bit more. So I was speaking to a fund manager who's followed your story and been invested in your company for quite some time. It was just a couple of weeks ago that I was speaking to him. And he was talking about Impact being a big game changer potentially for you because of the scouting software. And previously that had been one of the potential bottlenecks, particularly with regard to the soccer clubs and the Bundesliga. So just take us through the importance of that and how it's going to open up, some new opportunities for you.
That's exactly correct. I think we acquired a technology about 4 years ago from a company called SPG. That technology has been really the backbone of our video analysis solution, built on top of what they had done in Formula One, and we now brought that with a primary focus in global soccer. One of the hurdles that we kept encountering as we started to bring that technology from a cross-sell perspective was really related to scouting. And so, as some of you may know, scouting in global soccer in many ways is 95% of where revenue is made outside of the top, 20, 30 teams across the globe, right? It really is a business about building an athlete and then trading that athlete. To give you a sense of the value there, about $10 billion just last year were paid in transfer fees alone, right? So this is not salaries, just in transfer fees between teams. So it's really big business. And in that sort of part of the business, it integrates very deeply into the video analysis technology that we have. And so we have a competitor in the market that basically had a really an outdated but sort of an incumbent scouting solution out there. And we've been trying to solve that for a long time. I think we wanted to solve it initially by building something internally, but also knew that that was probably going to take some time. And Impact really came in as something that I think we're very, very excited, both from the technology that it's bringing, our ability to now combine it with our sort of our video analysis solution and see that really starts to do some interesting things in the market. But I think, Chris, the most important thing here is that the hurdles that I think we were seeing from a bundling perspective that our competitors were using against us immediately gets removed. And so I think that we're approaching this as not only should it help us cross-sell video to our wearables customer, and to know every time we cross-sell video, we're acquiring 2x of the average ACV we have on wearables. But now we're going to cross-sell because we have this sort of bundle on the scouting solution, and that bundle combined altogether is now not only 2x, it's probably like 5x what we were acquiring from a wearable. So I think we're very excited because it does open up an opportunity for us to grow. It removes a blocker that was preventing us from cross-selling. And ultimately, I think, we have probably the most sophisticated platform now in global scouting analysis.
Yeah. Well, a follow-up question, if I may, and if it's too sensitive, let me know. But do you have potential clients sitting there right now that have sort of been waiting for this scouting opportunity as well, and they might be calling you within the next, let's call it 3 to 6 months, saying, "Hey, now that you've solved that problem, we're really keen to, get on board with you guys."
Yeah, look, I think I would say this, without naming any specific clients,
Yeah.
I would say for the last 12 months, one of the things that we would hear from clients overall, particularly from our wearables client, was we really love what you're doing on the video front. We love the package that you've created, but we really need to solve this scouting component because this is an important aspect of our day-to-day business. If you could solve that, we would be delighted to do it. And I think since the announcement of us bringing Impact into our family, we've heard from a lot of clients who are excited about, hey, the possibility of what this means for them from a technology perspective, and what it means for them from working with us more directly on our video product. So yes, I think there is quite a bit of a pipeline getting created as we speak.
That's great. Let's talk about some of the other products. So you've launched Vector 8, upgraded Hub Pro, and integrated Perch, which you mentioned before. How are these innovations resonating with your teams right now?
Yeah, I mean, so let's start with Perch because I think it's probably the one that I think most people are not going to be familiar with. We acquired a company, Perch, about 5 months ago. Perch basically is Catapult inside the gym, right? So we have been, obviously a fantastic technology in capturing and understanding athlete performance on field. And Perch basically does that for what's happening in the weight room, right, inside the gym. The combination of what we do and what they were doing, I think now gives us probably the most complete picture of anywhere of what an athlete performance looks like, right? So if I'm if I'm doing strength conditioning in the gym, what's the impact of what that will have on the game in the training session tomorrow, and vice versa, right? So I think having the combination of those two things have been really exciting. I would say, Chris, when we acquire them, we knew they had a product that worked incredibly well in American football in North America. And now, and sort of the big question for us was, can we help them scale outside of North America? Can we go into other sports? And while it's still early days, 5 months into the acquisition, we are already seeing some really positive signs where, we're signing some really big deals in Europe. We've been able to bring their product into Asia, even for sports that normally aren't a big weight training like volleyball. And we've been able to bring it to the AFL, some AFL teams here in Australia. So we're pretty excited about that. Then Vector 8 is really sort of our flagship next generation hardware. It's in a complete reimagining, redesign of our platform around wearables. And again, really early days. We've only been out in the market with this about 4 months, focused in North America first. Just started to expand outside of North America and into new sports. But what it really does for us, and I think it's hard to kind of express our level of excitement, because what it will do is not necessarily that there's new hardware out there, right? So the hardware is faster. It gives longer range. It captures a bunch of more data. But the exciting part is that there's this underlying software component that now exists completely on the cloud. And what that means is that, we don't have to wait season to season to bring features to market. It means that, we could bring features now week to week. And really what that means is that our opportunity to bring things that are valuable to our customers and obviously drive growth in our, subscription business, has now just been expanded significantly, right? So we're very excited about both of those products. And again, plethora of other products related to that as well.
Well, you touched on it earlier, the cross-selling success that you've had. So multi-vertical customers grew 26%, I believe, and average contract value per team is up as well. So very nice numbers. But what's driving that success in cross-selling? I mean, it's not just the availability of product, because things don't succeed just because they're there. So how are you driving that?
I think our focus on cross-selling continues to be, creating value from a joint solution sort of platform, right? So really with the focus of we're going to help you save time because, there's a lot of workflow that you're going to do in one part of the solution that you don't have to now redo it in 5 different solutions, because the world is fragmented in our industry. So that saving of time is really resonates with our clients. Probably not a lot of industries, maybe finance as being, an equivalent one, where, time to make a decision is really impactful in terms of having a competitive edge, right? Having the ability to train. So a lot of our focus on our platform, particularly as we're cross-selling video products into our wearables client, is really related to that time-saving component. The second, and probably the most critical, though, is really that, the combination of our wearables technology, our data in the gym now, and, from on-field, and connecting that to all the tactical decisions a team must make. Bringing those two things together are giving our customers some insights that no one else could give them, right? And so it allows them to kind of say, look, when I'm making this decision around who do I put in the pitch, or if I'm making a decision of what play I call, tomorrow, do I have a full sense of what the athletes are in terms of, for example, their battery levels, right? Like,
Yeah.
are the athletes now at the right peak condition? Am I making the right call? Do I have the right people on the field? Those are, core decisions that the combination of our suite of products now provide that no one else can provide. So from a, contextual insights, I think our value proposition for our customers is always, we're going to save you time and we're going to give you more insights to make decisions smarter, faster than anywhere else in the world.
Well, let's pivot back to the numbers just briefly. Margins and profitability. So you've already talked about these numbers. EBITDA up 50%, 33% out of the Rule of 40. I guess the question off the back of, again, what are really solid numbers, how sustainable are they?
I would say we have been built to grow profitably, right? I think the way we look at our organization is really, growing with sort of 2 cost levers. So the first cost lever for us is our variable cost levers, meaning, every time we add $1 of revenue, there's going to be some cost that will be growing linearly with that growth of revenue, right? So things related to cost of goods, things related to the cost of delivery, sales and marketing, things that, you're going to have to invest to bring a new dollar in. Historically, we continue to find efficiencies on our variable costs, right? And so our focus has always been, for every $1 of revenue that we are bringing in the door, we really should be spending no more than about 45% of that $1 of revenue from a variable cost. What's happening in our world is actually, our sales team have more products to sell, right? So that in itself will make them more efficient. Our ability to bring technology that lowers our cost of support, such as our new hardware platform, such as bringing even AI into our support systems, means that these variable costs will continue to grow, linearly, but not at the same pace of our top line growth. So very sustainable in terms of finding efficiencies in our variable side. On their fixed cost side, which is basically 2 buckets inside there, it's, the G&A, so that the areas to kind of just administer the company, finance people, HR people, et cetera. But then it's primarily R&D, right? That's really the big bucket for us, is how are we investing in building the next technology for the rest of us. We went through a period of investment about 2.5, 3 years ago, and walked out of that with a really scalable platform. And so we've always said, from here on out, anticipate our fixed costs will grow, somewhere between 5 and 10% annually, a little bit of CPI, and obviously a little bit of investment. And I think what's happening in our space, Chris, is that actually not only are we finding that those efficiencies are carrying forward, but things like AI, for example, are giving us an edge on it, right? So we have now more production level code going out into market than ever before, which makes us, not only efficient in terms of, speed and bringing out technology, but it also limits the amount of investment that you need to do for, adding new resources, right, into your fixed cost base. So, I think our expectation has always been that, at a scale of around $200 million US in terms of top line, we should be generating a profit margin of 30%, meaning we should be bringing, about $60 million to the bottom line. We feel incredibly, incredibly confident that hasn't changed. And I would say, probably in the last year, I would think that, the acceleration to get that is probably getting faster, not necessarily slower. So very sustainable in terms of, keeping this bottom line going.
Yeah. Yeah. Well, one of the other elements that that feeds into, Will, is free cash flow. So I saw that your free cash flow, you did all of last year's free cash flow in just one half when with no debt. So a pretty impressive result. That puts you in a position of strength in terms of free cash flow and, of course, your balance sheet. Cheeky question, but what are you going to do with all that strength?
First and foremost, it's always good for us to keep building some cash reserves, in the books. As I have experienced in the past, there's always things that will happen externally outside of my control that will limit, sort of access to capital, right? So building nice cushion, I think, is always good. But I think, as you mentioned, we're, from a free cash flow perspective, we are building quite a bit in terms of those reserves. Through the acquisition of Impact. We also strengthen our balance sheet. So I think, we'll probably at the end of the process walk away with an additional $60 million US from a cash perspective, in addition to what we're building, right? So we feel pretty good on where we stand. Look, I think in terms of what we do with that, I think there are really two drivers for us to kind of raise capital and kind of have what we're doing. One is that we have been dependent now for almost 2 years, maybe a little bit longer, on a line of credit from a working capital perspective. We use about $30 million of working capital throughout the year, which we pay an interest fee on, right? So it has an impact to our bottom line. And that means that we no longer have to do that, right? We now have enough cash in the bank to kind of manage through it. And then two, we continue to see that, at some point there may be opportunities in the future. And one of the things we didn't want to do is, if should an opportunity come by that we think is useful for our clients, it's accretive to our Rule of 40. We didn't want to go back to the market to kind of do this, again. So I think we have enough firepower to react positively to an opportunity. We have enough firepower to not need, to tap into a line of credit for working capital. And, I think at least for the foreseeable future, we want to keep building on that reserve, just in case, rainy days occur.
Well, let's talk a little bit more about that future. So you've got the cash, the working capital, you've got the product suite seemingly in place now. So, just thinking, I know it's hard, but 3-5 years ahead, what does success look like? What do you want to execute on really well?
Yeah, look, I think the way we think about it is, what are we trying to ultimately do, right? And I think, I think the sort of mid target for us is, how do we get to $1 billion of ACV on it? And I think that, there's essentially sort of two big levers we're watching. How many pro teams do we have inside of our ecosystem? The more we add to our ecosystem, the more attractive we become to bringing somebody in. The more our wearables technology moves away from just being on the field and everywhere, it becomes more attractive. So number of pro teams is really important for us. We want to be somewhere around, north of 5,000. Maybe somewhere between 6,000 and 8,000 is kind of really our target. And then we're increasing the share of wallet from our customers, right? So just to kind of so you get a sense, I think, just in the last 2 years, our ARPU, or share of wallet per customer, has grown 25%. We're sitting around 28,000 average now per client. And our anticipation is that, we're accelerating that faster and faster over time. There's no reason why, the average, contract with Catapult across the entire board is not sitting somewhere between, 100 to 150,000 annually, right? Particularly given how big the industry and the importance technology is playing in it. So, if I look, down, 3 to 5 years, I would say the acceleration of those team counts, but more in particularly, how much they're spending with us, because we have this comprehensive platform, or two areas that we're seeing really, strong impact. And our goal has always been, if we get to around 8,000 clients, giving us somewhere between 100 to 150,000 annually, we'll be well on our way to $1 billion of ACV.
Yeah, very exciting. Well, to round it out, I'm going to ask a very selfish question. I love sports, as we spoke about last time. So I just wanted to ask you, last time you told me about the Brazilian soccer team, and I think about the Boston Celtics as well. But Same question as last time. What's a team that you've had some dealings with maybe over the last 6 months that sort of impressed you, and what stood out about the way they operate?
I'm always impressed by all our clients, right? So that doesn't continue to change by any means. I think I would say, for the last 24 months or so, we've been working incredibly closer to baseball teams in America. It was an area where we really weren't, really penetrated, up until about 2.5 years ago. And as you can imagine, watching the playoffs just happen, this year, and seeing the importance that our technology has now played into, I think almost, virtually almost every team that was in the playoffs at this stage. We were really proud of that. I think, watching how they're using our tech. I was talking to a practitioner, and he said, we've used all kinds of technology to understand, sort of the movement of the arm and how hard somebody is hurting themselves from a pitching perspective. And surprisingly, they said, your device, which sits on the back of the torso, has been the most accurate in predicting, injury or predicting how hard somebody is pitching. And so watching the playoffs this year, whether it was the Dodgers or the Blue Jays or the Yankees or the Red Sox, across the board, knowing that they were using our tech and knowing that our tech was having an impact on who was up in the mound, I think we're all feeling really proud there.
Yeah, that is so cool. And how good was Game 7?
It was fantastic. I mean, it's rare that you get a World Series to go to Game 7, and it's even rarer, I think, if you get a World Series to kind of sort of be such a duel between two fighters like that. It was really fun to watch.
Yeah, absolutely. Will, thank you so much for taking the time to take us through your results, some of the big things happening at Catapult. We very much appreciate it, as always.
You got it. Thank you so much for taking the time again.
If you enjoyed that interview, make sure to give it a like, and don't forget to follow our YouTube channel. We're adding lots of great content every single week.